Your house is worth whatever it's worth, right? Whoever sells it. Wrong. I'm Charlie. Welcome to Moving Home with Charlie, and thank you for coming.
Charlie Landing grew up in Sussex, is the founder of Best Agent and presenter of Moving Home with Charlie.
If you want to find one of these guys, look out for those compassionate professionals. All estate agents are not the same.
So Charlie, what would be your advice for people interested in buying new builds right now?
Don't overpay. Do buy, but don't overpay. That's why I say disregard the guff. Read into the numbers and look, and it's buried. The bad news is buried in the small print, okay?
Good evening, everyone. Welcome to the Property Press Awards.
They may or may not be telling the truth, but you should form your own view. Get out and view, get out and view, get out and view. You cannot be in a position to make offers and have the offers accepted if you're not viewing. Just be out there viewing. Pay attention to the back of the class. If you've not been watching my videos, I did one just a couple of days ago. Disregard the guff, guys. Good evening and welcome everybody to another live stream with me, Charlie Landon. This is Moving Home with Charlie. And this evening we've got a couple of amazing real life mortgage brokers who are qualified to take your questions. Welcome back to all of my existing subscribers and a special welcome to all new subscribers. And I just wanted to recap the point of this channel. The channel is called Moving Home with Charlie because my goal ultimately is working towards a home for everyone. And with my background in a little bit of politics, quite a lot of banking and a lot of property and utilities as well, and with the connections I've got of 25 years working alongside estate agents in the property industry, there's a chance we might one day have a country where there's a home for everyone. It's maybe a long way off, but that's the point. That's the objective here. Whether the market's going up or down is of no concern to me. My mission is to help people who are moving home, buying or renting or selling, whatever it is. That's the purpose of this channel. With that in mind, if you are a buyer, and whether you're selling to buy or a first-time buyer, if you don't have a cash, you're going to be needing a mortgage. And one of the things that surprises most estate agents I know is how few first-time buyers especially start viewing properties without a mortgage in principle in place, which means that they don't really know exactly how much they can borrow. And so, one of the pieces of advice that I give all buyers is make sure that when you go viewing, you've already got a decision in principle or a mortgage in principle lined up. Because one day you're going to go out and view a property, walk in the door and realize, this is our home. This is our future home. This is where we want to live. It ticks all the boxes. It's in our budget, etc. And if you are up against other buyers and you've got a mortgage ready and lined up and the other ones haven't, your chances of having your offer accepted are higher. And even if you are the only offer in town, and therefore you maybe put in a lower offer, if you've already got your mortgage decision in principle agreed, the likelihood of your lower offer being accepted will be that much greater. It costs nothing to get, if you're going to have a mortgage anyway, it costs you nothing to get that lined up before you start viewing, and massively improves your chances, and also means you'll be taken more seriously by estate agents, by many of them. Not only that, it actually speeds up the process, because a lot of buyers out there go and view a property, have an offer accepted, and then say, all right, well, we better go and sort a mortgage out now. And that can take quite a long time, longer than you think, to sort it out. And in that time, you might lose it to someone else. So getting a mortgage in principle is, I think, a complete no-brainer. Now, to do that, currently, according to the Moneyfacts website, there are over 5,000 mortgage products available to people who are looking to buy a home. Where do you even start with that? And it changes every single day. So I'm working with a couple of fantastic guys that you're about to meet who are independent whole of market mortgage brokers. And it is their job to know what's happening out there, because every individual buyer has different, unique personal circumstances, meaning that there is a different mortgage product that's the right one for them, or a better one for them, a better one for you. And it's impossible for anyone to know which of these 5,000 products might be the best. And if you're just doing your own research online, looking around, you're not going to know or find everything that's available compared to someone who does it all day, every day for a living. These two guys are guys that I didn't know before I started this channel, and I met through this channel. and are people who have demonstrated to me clearly that they are people of integrity and people who can be trusted. And that is why I'm very proud to have them as my mortgage partners on this channel. They are handpicked by me. We have met in real life. And if you do decide to go and get a mortgage through these guys, I get something from it in the end, right? So it does actually help the channel as well. It also helps them. And this evening they are here, so you can judge for yourselves. But I wanted to start off with this little bit of feedback, which I think is going to make them both smile when they come in. They're both waiting in the wings, ready to come in. So this evening, I invited some of my supporters on the buymeacoffee.com website to send in their questions in advance. And one of them sent in the following. Hi, Charlie. No questions from me because Hudson Rose already sorted me out and I have the offers confirmed. Best money I've ever spent and truly amazing customer service. I'll be tuning in though. Hope it goes well. Thank you, Joe. So there you are, guys. Welcome into the screen. First of all, Graham from Hudson Rose.
Hey, Charlie.
How's that for a little testimonial for you?
Well, we like to do our best. That's nice to know. Thank you very much for the person that we helped. That's always good.
Yeah, it's fantastic, isn't it? And I know she's actually been in the private buyers live streams, and she's actually come and joined in with her questions and told the story about how she's secured the first home that she's ever bought, and that it wasn't one she was expecting to get. Good evening, Lewis. So it's Lewis Shaw from Riverside Mortgages, Riverside Financial Services.
Riverside Mortgage. Well, there's two. There's Riverside Mortgages and the Shaw Financial Services. So pick one of the two.
Okay.
Generally, at the moment, most of the stuff goes through Riverside Mortgages. Yes.
Fantastic.
So.
Well, guys, welcome back.
Hi.
I think it's been 6 months since the last time we did this, which I can't quite believe. I really think we should be doing it much more often than that. That's totally on me. Chaotic, such as my life is, and I would like to do it more because there are always questions for mortgage brokers. Now I've had two questions coming in from the supporters club for you guys. So I'm going to start with those if that's okay. I think also it'd be nice to have a bit of a wider chat about the general mortgage market and what life is like as a mortgage broker in May 2023. It must be an interesting time.
That's a line of couch.
Yeah. Actually, no, we should start with that before we get to the questions. Do either of you want to give just a general update of how has your world changed, if at all, in the last 6 months?
All right, I'll go with that one, Charlie. Why not?
Go, Graham. You go
I'll
first.
go first. It's probably the same as you, Lewis. How has it changed? Well, it's changed 6 months. You said 6 months since we last spoke. And I was going to say, well, not a lot's happened in the last 6 months. Broadly, things change in our world day to day. So 6 months is a lifetime in mortgages. You'll hear us say that quite a lot. I think, going back 6 months was mini budget time pretty much, wasn't it? That was dicey. That was scary. That was a strange couple of weeks where lenders didn't know how to price their mortgage products. Lots of withdrawals, rate rises. Mortgages, NatWest famously didn't have anything starting with less than a 6 at one point. We then saw a bit of a lull pre-Christmas. I think it kind of it dropped off because of obviously the effect of the mini budget. It then run up to Christmas, things tend to slow down. Come to the other side of it, though, last kind of 4 months, things have been really positive. Certainly from our point of view, we've seen a lot more as well. I know we're talking about home buyers predominantly tonight. We've seen a lot more on the remortgage transaction as well, because the rates are back to what I would say is a more normal market historically in terms of lenders repricing up, down, sideways. It still gives me sleepless nights occasionally, but I wouldn't do anything else. But broadly, I think we're on a bit more of an even keel. And regardless of what is in there in the press, regardless of what's going on with the wider base rate and interest rates, things are actually looking pretty strong from a mortgage perspective at the moment, because lenders' outlook is obviously further into the future. So that always helps.
Okay, cool. Thanks. And Lewis, have you got an idea? How's your world changed in the last 6 months?
Yeah, well, for a period of time, it was incredibly stressful, like burnout. I'm ready to just throw the laptop through a window stressful because there was just a period of time where everything was in limbo. And all of a sudden, everyone wanted to talk to us. I'm one guy. I've got a broker that works with me, with me, however you want to phrase that. But again, we're only a couple of pair of hands, and everyone that's in the back book all of a sudden wanted to talk to everyone. And that made it incredibly stressful. And to be honest, I'm still working through the backlog, because the problem is that, of course, it created a huge backlog in terms of everyone wanted to do something, and then people started to get buyer's remorse, and then, oh, actually, am I doing the right thing? And so I don't know about Graham, but I found that for a period of time, I was just kind of redoing work that I'd already previously done because there was so much volatility.
Yeah.
But of course, at the same time as you're trying to do that, new people are coming in the front end, and then you just end up with this huge backlog, which I'm starting to get through it now, thankfully. But it's only just now starting to kind of even itself out, as opposed to where it was, where, there were days I was working and start at 7 o'clock at night, I'd still be working at 1 o'clock in the morning. I did get to a point where I thought, I can't do this for much longer, personally, but it's all right now.
I'm glad you're still here.
Glad you're here, still fighting.
In the towel. A couple of fans who got in the comments here. Someone who's spoken to you already, and Alex Rossi, I think Lewis is one of your, who's giving you a shout out there, which is cool. Right, so let me get into the first question we've got here. Hi, Charlie. Can you ask if a PAYE monthly salary is paid late, brackets, end of the month payment doesn't credit until early next month instead, does this impact mortgage applications adversely? Have years all fine on time, but one recently, one not? I think I read this is frowned upon.
Do you want me to jump in?
Well, I was waiting to be asked. I don't know. I was being too polite. I thought Charlie was going to be the host and go, so, you after this one? It's clearly not.
I just, so Lewis, go for it.
Lewis, jump in.
Okay, so yes, it's frowned upon. It's more a case of there needs to be an explanation as to why. Because if, for example, your payslip says that you're paid by backs and on the whatever date, the 28th of the month, for example, but that then arrives in your bank on the 3rd of the next month, that will raise eyebrows, especially if everything else is stacking up.
Right.
Because they just want to know what the explanation is for that, because it's one of the flags that gets raised when people are staging income.
Yeah.
Now, I'm sure that this isn't the case there because you've got years of track record, but yes, it is frowned upon. As long as there's a legitimate explanation, it shouldn't cause too many worries.
Right. Great. Okay, thanks. So next question. We have an agreement in principle which gives us a good idea of our total budget along with the deposit. However, for, say, a 200k mortgage, a percentage point either way could make a big difference to monthly affordability and thus overall budget as well. Is there a good way to know this ahead of actually applying for a mortgage, and how should we approach this? Graham, your turn.
Okay, so how are you going to, so there's two things there. How are you going to find out, and then how are you going to deal with it? And that's I guess, the crux of the question. An agreement in principle, for the most part, or mortgage in principle, we use these terms interchangeably. You'll hear us call them AIPs, agreements in principle, decisions in principle, mortgage. They're all the same thing, okay? And all you're doing there is actually dipping your toe in with a lender to credit score to see if your credit is sound enough for a loan, okay? So with everything with mortgages, there's exceptions, but for the most part, a decision in principle doesn't secure any interest rate, which I guess where the fear comes from. Saying, well, I've got the decision in principle, can I afford it? The truth is that unless you are on first name terms with the lender, then you're going to have to use a broker to find out. What we would tend to say is you get your mortgage in principle. At the time you get your decision in principle, you chat to your broker, you find out, and you would have done this anyway to find out, well, what's it going to cost? We always tend to advise our clients to come back just before they put an offer in. Two reasons for that. One, we're happy to talk about offer strategy. We can talk about how the best way to put your offer forward, the way to sort of give you the best weight, but also just check the numbers again. Because if you were doing this, September, October time, then yes, you might have had it. And we did have people that had decisions in principle based at rates of, 3.5%, 4% coming back, and it was 6%. Now, bar any major catastrophes, we're not expecting that kind of paradigm shift to happen again. So whilst rates go up and down, they tend to fluctuate 20 basis points, 0.2% up and down, that sort of thing. We're not hopefully going to get to a point where you've got 1% whacked on top. So I'd say go back to the broker, go back to the individual where you got the dip on before you make an offer. Just sense check the rates, but be mindful that over the longer term, of course, rates could go up by that level. So don't go into something that's really going to put you against the wall if it goes up by 1% in 2, 3, 5 years. Obviously, we'd hope wages and things and income increases to some degree to counteract that. But it's always something to be mindful of. I mean, 1%, Yeah, I think 1% would hurt quite a lot of people, but we don't want it to be. If it's a case of actually 1% is really going to put you in a hole, you might need to taper down the expectations of property price and purchase price and loan size just to make sure you don't have any issues further down the line.
Cool. Brilliant. Thanks, Graham. Great answer. Right. Got a question from a relatively new follower to the channel, Norlis on YouTube, who says, question for the brokers, do they do the checks on your deposit, or is that done by the bank or lender that eventually provides the mortgage?
All of the above.
Yeah, basically everyone. So everyone's having to go with the deposit. So as a rule of thumb, we're going to need, so brokers as a guide, a catch-all this is. So we're typically going to ask for 6 months of bank statements if it's savings to evidence the accrual of the deposit. The solicitors are also going to want to see the same thing. The estate agents are also going to want to see the deposit, because that's there was a change where HMRC brought a change in, I think it was HMRC, wasn't it, where they increased or strengthened the anti-money laundering laws, which brought in their estate agency. So now we all have to do checks. The most stringent check ultimately is from the solicitors, because they're the ones that actually verify for the lender the source of funding. But we all have to do it. And it depends on the lender. So, for example, there are a number of lenders, you'll just key in what the deposit is, the amount, and where it's from, savings, gift, etc. Some will just leave it to the solicitors to verify and won't ask us for it. Other lenders will actually come and say, we want evidence of this. If it's, for example, gifted, they'll want a gifted deposit letter. Some lenders want a gifted deposit letter plus a bank statement from the person that's gifting along with ID. So it varies lender to lender.
Yeah, I would add to that Lewis touched on a point there, mentioned HMRC, because he's right. The estate agents are, from a money laundering perspective, are covered by HMRC rules. Now, there's different things that people accept certainly come to an identification and possibly deposit as well. Is HMRC is very prescriptive. So they say you must have, if you're going to verify the ID, it must be one of these documents. In our world, Lewis and I, then, because we're FCA regulated, all we have to do is do it to our satisfaction that we have checked that customer. So we're given a bit more free rein, but we all sort of select the same sort of things. Solicitors, again, they're regulated by the Solicitors Regulation Authority or the Conveyancing lot, whose name escapes me.
Select.
That's the one. So again, they have different things, but the key thing is that these are legal. These are legal things that we're dealing with here. It's not because we're interested. These are laws we have to get by. So expect to show everybody lots of different things, but ultimately it's there to sort of keep crime at bay and for the right reasons.
Sounds brilliantly efficient, doesn't it? That all 4 different categories of industry have different rules for.
What do you expect?
Yeah,
why not?
Yeah, I don't got no idea why buying a house is so difficult. Right. Okay. Now we got some love here from you, Lewis, and someone called R3 Mortgages. We love you, Lewis.
So yeah, so that's Riz Malik, Rizzler.
Hi, Rizzler.
Rizzle kicks.
Right.
His when it rings me, his do you know down with the, is it not down with the trumpets?
Yes.
Mama do the hum. Mama do the hum. So when Riz rings me, that's his theme tune on my mobile.
Okay.
He's a mortgage broker, by the way. He's a mortgage broker. Yeah.
Guys, any watching? Have you got any questions? Put your questions in the live chat, and we'll get them lined up. So next question, which I haven't seen. So Daniel Cameron on YouTube, how did decision in principle done in January for 250k? I've just renewed. I assume he means the decision in principle, and was expecting it to go down slightly below inflation wage increase. Instead, I'm getting 300k. Quite surprised. Is that likely to change in future?
If it's sorry, Lewis, I'm going to jump in there. I think you're the last one. If it's the same lender, the reason is lenders are tweaking their calculations. So we've seen some lenders increase their what we call LTI, loan to income. All right. So everything's done on affordability calculators, as you're probably aware. Numbers are input, checks it against ONS data, chucks things out the other side. However, within that, lenders have sort of hard caps, loan to income. So they'll say, look, if your deposit is 15%, all right, if you've got 50% or less, and your income's under £80,000 joint, then we're going to cap it at 4.25 or 4.5. Okay. So these are things that lenders sometimes play with. And recently there have been a couple of changes where lenders have said, actually, they've lowered the threshold for the income, or they've increased the threshold on the deposit side or decreased the amount of deposit you need and are applying wider caps. So it could be that it's fallen into one of those, could be that it's with a completely different lender. I'm guessing not by the question, but yeah. So is it going to change? I mean, yes, it could change. It could change all the time. Again, sense checking it before you go in and make that offer is the best thing to do. But broadly, things are moving in that direction. So it's a positive.
It is a positive, definitely. Right, next question. Now, I'm not sure that this is a question you can answer specifically, but I think a general answer might be helpful for everybody. So Tom 1991 Ash says, looking to get a mortgage in principle next month. I work full-time as a normal employee. My partner is a contractor with a year's worth of books, just waiting on accounts to do the HMRC. Will we have issues getting a mortgage in principle? He goes on to say, we have a 100k deposit and looking for 325k home. Credit scores are really good. Lewis?
Sure. So as long as you've got, well, first things first, there's only a handful of lenders that will take someone's income where they've only got 1 year's accountancy evidence in terms of trading for themselves. So that said, the lenders that do are, well, one of them's a large mainstream lender, so that should be fine. As long as the tax return has been submitted and the tax paid, it should be fine. Now, given that you've got such a high deposit, that will obviously make things better. However, when it comes to policy on income, lenders are pretty hard and fast. So there's no kind of there's no leeway. So, for example, if a lender says we only accept 2 years accounts, that's it. They're not going to change that. The lenders that say we'll accept 1 year's accounts are the lenders that will accept it, and there's no leeway on that. So no matter how much deposit you had, it wouldn't really make much of a difference because the policy on income is very strict in that respect. So you should be fine as long as the tax return is submitted, the tax is paid, and the documents you're going to require are called an SA 302 or a tax calculation, depending on the accountancy software that your accountant uses, and the corresponding tax year overview. As long as you've got those two documents and a few months worth of business bank statements, you should be fine.
Sorry to jump in on that one, because it may be that you just missed it, Lewis, something, but there's something specifically relates to contractors. And I think they said it was contractor. So what Lewis outlined there is 100% right for those lenders looking at sort of pure self-employed. If you're a contractor, the key thing is what style of contractor you are, because there's certain lenders that will deal with this slightly differently. So if you're a day rate contractor, if you're a project manager, an engineering or IT or something like that, okay, then there are certain lenders that will negate the need for any accounts at all. And what they'll use is the contract value. So say you've got £350 a day. They won't worry, and it's just you doing your project management into a company. You've got one company going into. What they'll do is they'll have a set piece of a calculation that'll apply to that. So they'll say it's £350 a day times 5 days times 46 weeks of the year, and that's the figure they'll need. So contracts are a little bit special because even if you haven't got 1 year books and you fall into that day rate contractor policy, there's lenders that can assist. Now, the other contractor that's interesting is the construction industry schemes, so CIS contractors. That's where you are essentially contracting your services as a Sparky or a Chippy or whatever it is that you do, and you're the person that is contracting you, the firm, is paying your PAYE tax at source. So you get a pay slip, and then you can then put that through your books. Now, again, there are lenders set up to deal with CIS contractors where you won't need accounts. They'll treat you as employed, and you can use your pay slips. So what Lewis said is absolutely bob on. There's no arguments with me there if you're going down the self-employed route. However, I think that one did mention the word contractor, and it might be that there's these, depending on what style of contractor, right, there's these other pieces of policy that might apply, which mean you may not even need the HMRC 1 year account. You may just need experience and the proof that the contracts are there.
Okay, brilliant. Thank you. Next question, I think might be, don't know if it might be contentious or not. Lovecraft Gaming on YouTube says, at what point do I sign for life insurance from a broker? I'm currently waiting bank valuation. Broker wants me to sign for life insurance now. Lewis, do you want to give it that?
Well, in all honesty, there is no. So in terms of sign, you don't actually. There's very little to sign when it comes to life assurance. You answer the medical questions. Depending on the system that the particular broker uses, either you'll know that you've been accepted prior to submission, or if they use kind of a bit more of an old school system where you're doing it direct with a provider, you'd have to answer the medical questions, submit it, it may go into underwriting. They may come back and ask different questions. But the reality is when you should do it, there's no right or wrong answer. I tend to do it generally at mortgage offer. So when the mortgage has been offered, okay, let's have a chat about your mortgage offer. Everything's fine. I've read through it. Everything looks okay. Now let's sort out the life insurance. But the important thing here is it doesn't matter when you actually submit the application for the life insurance. What you need to be aware of is when that policy goes on risk.
Right.
So when we say on risk, that means it actually starts. So you can apply for life insurance generally with a lot of insurance providers. Even at the point that it's in underwriting, you're actually covered. Quite a few of them offer cover, even though you've not actually paid any premiums or started. And that's purely because there have been instances in the past where people have exchanged contracts, not put a policy in force, and then passed away before completion. And of course, at that point, they're liable for the mortgage. So that's why they do that. So in all honesty, it's probably worthwhile getting it done and dusted because it's not actually going to go on risk until completion or the earliest exchange.
Cool. Yeah, thanks. I'd agree. I'd just say to add to that, don't underestimate how long it can take to be underwritten for life insurance. It's not like buying car insurance. These things are properly underwritten, and the reason why a lot of brokers do start earlier, and I say I think we probably do it slightly earlier in the process where we can, but after the application's gone in, it's simply because it can. If there is something that comes up on the application, and it happens, frequently, the insurer might want to write to your GP just to get a what's called a targeted GP report, so just get a bit more information. And of course, GPs are busy. Now they do get paid for this for writing these letters, but it's not uncommon for it to take far longer than getting a mortgage offer. 4, 6, 8 weeks sometimes to get that offer. So it's about ducks in a row. You want to hit exchange with your mortgage offer in one hand, your insurance document in the other, and then start them at that point. And Lewis is right. If it doesn't go on risk, if it doesn't start, you don't start paying. Nothing ventured, but you don't want to be in a situation where you're exchanging without it, because as Lewis said, you could come a cropper, which is a bit of a nightmare.
Cool. Okay, next one up for you, Graham, maybe. 3-player politics says, I have is it Lisa or Lisa?
Lisa.
Just topped up to the maximum. Do I need to wait for the HMRC 25% top up, or can the mortgage broker get quotes as if I have the full amount, including HMRC top up?
Oh, I hate these ones. These are my worst questions. Right. So my understanding is on a LISA, you can totally go ahead with it, right? Because it's the solicitor that's going to get the bonus, if I'm not mistaken, as it was in the Help to Buy ISAs as well. So you're never actually going to have the top up until you are purchasing the property, because it's the solicitor that requests the extra funds, because they can only be used for buying a property or retirement. Lewis, feel free to jump in and correct me if I'm wrong here, because I'm patchy on it at best when it comes to LISAs and Help to Buys. But
so with LISAs, they are slightly different to Help to Buy ISAs. So with the Help to Buy ISA, you would save you £200 a month, and then at the end you get the top up on at that point. Whereas with a LISA, once you whack the money in, that top up goes in at that point.
All right.
Because you're right, So if you throw your £4,000 in, you're going to get that grand top up. So it will show up. So actually, when it comes to the deposit of the solicitors getting all that sorted, basically let them do it is the way to do it. Let them do it, but yeah, generally you'll get that top up when you've popped your savings in. And one thing about LISAs, by the way, in order to use them, I believe they have to be open for a minimum of 12 months. So it's not as though you can open one, chuck £4,000 in and get an extra grand and then do it kind of the next month. You do have to have them running for a minimum of 12 months.
There we go.
Cool. Thank you. Quick question referring to the last question about life insurance. Is a yes or no, I think this one. Do you legally have to have life insurance to obtain a mortgage?
Now, I have a flippant answer to this question, right? The answer is no, right? The answer is no. People, and be wary of anybody saying or insinuating that you have to have it, right? Because that's just, I don't like that, right? We take a very honest approach with it. My flippant answer is you don't have to look both ways when crossing the road, but it's advisable, right? So, it's one of those things that you don't have to do anything. You're buying a house, you're a grown up. Yeah. It's up to you to make the decision. Would I secure a debt over my head without cover, seeing what we see when we see the claims? No chance. And I would say that life insurance is really the one everyone always thinks of, but for a lot of people, it's not maybe necessary. There are far more important insurance products you should be taking when buying a house. Income protection, number one. I mean, not even buying a house, just renting, you should have income protection. When you look at the figures of what the government pay on statutory sick pay, you look at what your sick pay benefit is, and you work out how long you'll be able to keep your head above water with just your bills and your mortgage to pay. It's terrifying. So life insurance is always where people go because they think, no, you don't have to have it, but I would advise it if it's right for you. If you're single, no dependents, no one's, this is brutal, isn't it? No one's financially disadvantaged by your death. No, you don't need it. Not important. But the problem is when you have something that stops you working, you're a drain on if there's anyone else involved because they've got to pay for you and everything else. And we make light of it, but it's the reality. We don't want to sugarcoat it, right? It's not our business. So no, you don't. Be careful of anyone that says that you do or insinuates you do, but give it some thought before you just knock on the head because it could come back to bite you.
So on that point, actually, So just to kind of put this in context, I was 40 in November just gone, so I'm well into my 40s now. I used to be in the forces. Now, horrendously sad, heartbreakingly sad. So a guy that I was in the forces with, he was 44 and very active, very healthy, didn't smoke, didn't really drink, kept fit. And he was working in the public services as a police officer, and recently passed away at 44. I don't know how. He was responding to an incident and dropped down, passed away. So that's a guy that I've known since I was 18, and he has a wife and a couple of kids. There's also a lady that I know. She's 41, a husband and 2 children, and she's diagnosed with an inoperable brain tumor, and I believe she's gone into a hospice today, actually. So this idea that's 2 people recently. Obviously, that doesn't happen every week, thank God. But it's one of these things where it's always going to happen to someone else. But the reality is it doesn't. And this is not me selling insurance, because you know what, like as Graham said, you're old enough and brave enough to do it. So if you don't have insurance, I'm not going to lose a house. Graham's not going to lose a house. You might though, and it's up to you. And here's the thing: you're adults. Everyone's an adult. You can make your own choice. But what you can't do is if you've had the opportunity to put something in place and then don't, you can't cry over spilt milk because you're an adult and you had a choice.
Very salutary tale, and sorry for that. If that's a lifelong friend of yours, Lewis, that's horrible news. Right, next question. Lord of the Flings. Questionable YouTube title there. Question for brokers: has the lag in completion come down since August 2022? It was close to 5 months during the peak, where conveyancing searches were taking ages. Has the backlog cleared? That's a yes or a no. I'd love both of your answers to that.
I don't think
it's better than it was. I mean,
it's better than it was, but I wouldn't say it's cleared. But it's better than it was.
I would like to see the day when it is cleared, because I don't think it ever will be cleared given the processes involved. So I don't think it was always 3 months standard, but it wasn't even that when you looked into it. But I think they were. We've had a period of a few years whereby the pandemic and the boom, so you had solicitors and conveyancers working home, you had land registry in a mess, all that kind of stuff. I don't feel, and it's only a feeling, I don't feel it's as bad. Our pipeline seems to be coming through a lot quicker than it was. But when you look at the conveyancing process, and it is the conveyancing process, it's no wonder it takes a bloody long. No. I mean, we're working on stuff from like the 1700s and laws. I mean, it's documents with wills, and it's mental.
Yeah.
I think that transaction volumes are something like 25% down on this time last year. And I think that's definitely helped to ease the pressure on the conveyancing process. There's no doubt about that. I actually, on Thursday evening, I haven't published it yet, but on Thursday evening, we're doing a live stream with a guest from a company called Property Searches Direct, who provides property searches direct to consumer that can be used by the conveyancers for the transaction. You've frozen. Are you still there? Okay, thank God for that. He said that one of the things that's really frustrating is that of all the different searches that have to be performed, some of them come back really, really quickly. Some of them can take days, and so it depends on the council. And some of them can take days or weeks, or in really bad cases, months, and it's out of everyone's control. It's a really complex area, actually. It's not, although it's seen as part of the conveyancing process, it's not part of the conveyancing. The conveyancer needs to check that the searches have been done, but actually getting the searches is not conveyancing in itself. So it's 7:30 Thursday evening. We're going to have a live stream with him talking about property searches because, but I think it's interesting. The fall in overall transaction volumes is a bit of a two-edged sword, I think, for certain parts of the industry. Anyway, on to the next question. Here's a quick one. Steve on YouTube asks, is it possible to get a mortgage immediately after buying a property 100% cash?
So I'll dive in because I've got a particular case like this at the moment. So it is possible immediately after buying a property with cash. However, you're extremely limited when it comes to lenders. So the vast majority of lenders have a 6-month rule where you have to wait 6 months before you remortgage. That's simply because of anti-money laundering rules. So yes, you can, but with an extremely narrow panel of lenders. When I say a narrow panel, I'm talking 2 or 3 out of 90 or however many. Yeah.
Cool. Okay. Next question is it's slightly off, but it's from LinkedIn. Scott Stewart on LinkedIn. Evening, Charlie. How are the stress tests on buy-to-lets currently? Is 25% still possible at, say, 150k purchase?
Well, the rent stacks up.
Right.
So, I mean, that's what it comes down to. It is the stress tests of buy-to-lets have come down a little bit. You're still getting a better affordability over longer-term fixed rates. Again, limited company structures bring that down. Varies from lender to lender, though. 25%. I mean, if you're getting $2,000 a month in rent, then you'll be fine. But it is down to the actual. I think what Scott's alluding to there is 25% being the theoretical maximum, as in that is the sort of minimum. Now there are lenders that will do buy-to-lets at 20% deposit, but the rates are pretty horrific, and the stress tests are, if you haven't got 25% to stick into a buy-to-let, you probably might want to look at something different in my experience. So yes, it is still possible, very much property dependent. Area of the country, rents are pretty strong at the moment. I think it's fair to say people they're like hen's teeth, good rental properties, which again is probably leading to some of the perceived buoyancies in the market at the moment on a residential side. But so it is still possible, but very much property dependent.
Great, thank you. We've got lots of questions here, so I'm going to keep on cracking through as fast as we can. They're building up faster than we can get through them. Here's a very general question, and of course, it's going to be a general answer, but Magic on YouTube says, so what is the current salary to how much you could lend multiplier for higher salary ranges? It's a very, very general question, but is there a kind of general rule of thumb of salary multiple for borrowing for or couples?
So in terms of what the salary would need to be, so £70,000 upwards starts to unlock higher salary multiples, but it's not just salary. For most lenders, it's salary and deposit levels.
Yes, okay. And what are the multiples? I mean, what's a typical multiple if you're above 70k income?
You get to 5.5 over 100.
Yeah, so 5 times, well, a cord will do 5 times at 70. If you're over 100, you can often unlock 5.5 times.
Okay, cool. All right, thank you. And so for lower as well, for people on 45k, 40k, what's it more like 4 times? Is it
deposit dependent? Deposit dependent. There's certain lenders that will be a bit more lenient if you've got a larger deposit but a lower income. Even sub 40k, you can unlock 4.8, 4.9 times with some high street lenders if you've got deposit in excess of 25% or 20%, I think probably. But so it's really difficult because, again, everybody's doing it slightly differently. So you need to know your options, but it's not a case of if you're under this, you'll only get that.
Right.
All these moving parts get into it.
Here's a controversial one. I don't know what you're going to say. Do these two have an opinion?
These two? Come on, Matty. Come on, mate.
You lot have an opinion?
Have
an opinion on if the market is dropping or not?
I do have an opinion. I think it's broadly, certainly in the areas that I work, I should say. Of course, I do mortgages all the way across the country. There have been some drops, but I don't personally foresee the kind of a huge shift, at the moment. So there's been marginal kind of reductions where I am, but it feels pretty stable at the moment. And obviously, I work with a pretty large independent estate agent, across a large swathe of the country, and I look at their data, and it's holding up pretty well, to be honest. Now, so here's the thing: the volume of transactions is lower, but the prices are pretty stable.
Okay, and is that average across the country? Are you slightly more to the north or to the south in terms of?
So that estate agent is in the north, but then also my place in the Midlands. That's broadly stable.
Okay.
I think the big thing is the people that are affected by jumping mortgage rates are the ones that have got huge mortgages. Because if you've got a 100k mortgage, then yes, your mortgage rate will rise and the payments will increase, but it's not the same. If you've got a 100k mortgage and it's going up by 2%, as opposed to a £500,000 mortgage going up by another 2%, that's a big difference. So those areas where they've got the big mortgages, they're the ones that I think are going to have the rougher ride.
Okay, Graham, have you got an opinion?
No, I've got an opinion. I've always got an opinion.
Do you want to share it with us?
Like Arsenal, isn't they? Yeah, well, look, is the market dropping or not? Yeah, I think it's certainly. I don't think it's booming in the way it was. I think we're more on a normal market. I'll echo what Lewis says. We're seeing, and we're still sort of processing a lot of purchase transactions. My neck of the woods, for those that don't know, is we're the southwest. We're sort of Gloucestershire, Cotswolds, so quite a buoyant area anyway, because they're not building any more 17th century cottages, and people like to live in those. But equally, we cover very inner city areas as well, where things are a bit more touchy. So I think things will come down a bit, but the right house at the right price is going to sell and will continue to. I mean, I've got friends and family moving at the moment, and it's just about being a bit more canny about what you offer. But I'm certainly, we're not seeing things going 10% under. That's just not happening. So yeah, I wouldn't put a percentage on it. I mean, there was something out today, was it Capital Economics saying 4% or whatever from here. Who knows? The key thing is you're buying a house to live in. Yeah. Yes, it's going to be, if you're going to live there long term, it's shelter, it's security. Okay. If you can do it and you've got the deposit in the bank, your deposit's going to be losing money through inflation. So you've got to weigh off the ups and the downs with it, but just be smart about, and this is probably your bit, Chai, smart about what you offer. Do you mean don't be going nuts? It's not the time to go nuts, but it's also, I don't think it's all going to come tumbling down because we still have this massive chronic lack of supply. If I knew what rates were going to do day in, day out, I'd be on my yacht in the south of France.
Chronic lack of supply. I mean, the volume of property for sale is up 60%. And a lot more of it sticking around in the market now. So lack of supply of properties for sale, you think? Is that what you're expecting?
Lack of supply of properties I think what properties available. I mean, you look at what's happening in the rental market. There's not enough. We need to have more affordable properties. I mean, talking about where I live, I can't comment on everything because I'm not everywhere, but look where we live, and certainly if you're looking at new developments, I mean, the builders just want to build 4-bed executive homes like it's 1986, right? Now that's wonderful, but there's people, if you look at the Cotswolds as a district, it is second or third in terms of average wages to average house price out of London, all right? Because we've got very rural communities as well, right? But the houses are as we talk about 17th century quaint cottages that are being snapped up, and I think that could be solved if actually when they do these developments, they don't just have a token 1 or 2 properties, but an actual design where we try and look at the NIMBYs and things and say, look, let's sort this out. So yeah, I think there is a lack of supply.
Okay.
I'll stick by it.
Okay. Cool. Right. Here's the next one. If I received money from outside the UK and deposit insert it in a UK bank, and it's been more than a year past for this, what kind of questions will I be asked if I want 100k down as a deposit for property? Asks SH.
Quite so.
Yeah.
Okay. Well, can I give an example on this? Just to go back, when I bought the house I'm in now 2 years ago, we had to prove deposit. My first house, we had a small gift that came from my wife's grandmother's estate, and when we bought the most recent house, the solicitor asked for a copy of the will to show the gift that was left in 2001. So to prove where it had come from.
Okay.
I mean, they didn't ask if she was running drugs and guns, but that
Right,
was
okay.
didn't he? But it goes back. So I would expect, now obviously every solicitor's going to look at it differently, but there's going to be questions. It's not going to be a case of, well, it's been there 12 months, because they're going to look at it and go, well, where's this come from? And obviously, look, if it's legitimate, you've got nothing to worry about. It's fine. Money comes from overseas. It's not a problem. But just be prepared for some questions.
Okay. Cool. Next question. Kevin Pandian on YouTube says, as a first-time buyer with just a 10% deposit, will I have more options to choose a better mortgage rate? What should I do to increase my options?
There is no. Well, here's the thing. As a buyer, I'm going to get kind of all strict and FCA regulated. You don't choose a mortgage rate. Obviously, the mortgage lender sets the rates, and brokers or advisors, interchangeable term there, we recommend a product based upon your needs and circumstances. So there is no choice, so to speak, because that would then constitute what's called execution only, which is kind of it's a big no-no for the Financial Conduct Authority, unless you're either qualified as a mortgage broker. So I can have execution only, as can Graham, because we're qualified.
I can't actually, because my wife's not.
Ah, right, okay. So I can.
But Mary Lewis.
Or if you're a high net worth individual, which is either you've got either £3 million in assets or earn in excess of £300,000, then again you can start making choices, because you're classified as a kind of you basically know what you're on about. So in that respect, no, you can't choose, and there is nothing to do with there's nothing that you can do to increase your options other than have a great credit score or increase the deposit, because the rates are the rates. And actually, lots of people focus on rates. Forget about rates. Focus on the monthly payment. That's what you're not paying a rate. You're paying a payment. Because if the payment, if the rate is 1% or 5%, is it affordable? That's what matters. Because we can't change what the mortgage rates are doing. All we can do is determine, is it affordable, and if so, crack on and buy the house.
Okay, great. Thank you. That's a great answer. Kevin H asks, I'm nearing 5 years post-bankruptcy discharge and have been given wildly differing advice regarding deposit requirements, 10 to 30%. Are 90-95% mortgages available, or should I wait another 14 months?
So, do you want to jump in, Graham?
Well, no, I mean, I was just reading the question back. I mean, I'll give my thoughts if you want, but 6 years, the thing is with the bankruptcies, obviously after 6 years, anything on credit files tends to disappear, but bankruptcy is slightly different. Lenders will want you to just close that for life generally, okay? And some lenders will just have policy whereby they don't accept applications from bankruptcy, discharge or otherwise. Others will have policies that says as long as you're discharged, you can apply, but of course your credit score is never going to hit the mark to do it. So, I mean, if you're getting deposit requirements 10 to 30%, then you've got 90. So will you get a 95% mortgage? I mean, it depends on the rest of your file. It depends on everything else. I would think waiting another 14 months, if that is the option, to try it. But until you brute force and you put it in with a lender and see what it says, it's going to be tricky. But I'd say with bankruptcy, it's not the same as things like defaults and CCJs. Bankruptcy is I don't want to say it's serious, but if you have a chart of sort of missed payment on a credit card through to repossession, bankruptcy is unfortunately on that larger upper end. But it's not impossible. But I think Lewis might have a bit more expertise on this than I, and might contradict me.
So there are a handful of lenders that will allow you to apply after 3 years. There's a few more that will allow you to apply after 4 years. A few more still after 5. Pretty much everyone after 6. Now, with regards to the deposit level, it's purely down to credit score. So I did a bankruptcy case where someone had been discharged for 3 years. They had a 50% deposit, and I put them with a major high street building society. I don't want to say the name, and that passed, and it was fine. But it depends upon the damage that was done on the credit file prior to the bankruptcy starting, and if that's still lingering. If a lot of that's gone off the wall, but also when we're thinking about credit scores, it's not just a number. So there are lots of, when you do a decision in principle, which is ultimately kind of going, are we happy to lend this person money? There's lots of different factors that are playing into that. So if you've got a really high income and you're not borrowing, huge multiples of your salary, and you've got a saved deposit as opposed to a gifted deposit, because actually that affects the credit scoring as well, then you could find yourself that, you might pass with a major high street building society. Not to mention the fact that if your credit score is strong enough, a lot of mortgage lenders have, at the end of an application, they'll have honesty questions. And I've seen cases decline where they would have passed, but the person answered them dishonestly. So there are major banks. So the reality is that there's no way of knowing until you actually try and do a dip. But if you're 5 years post discharge and it is 5 and you're going into the 6th, then I'd say it's probably worthwhile having a crack.
Okay, thanks very much. Next question from Beamer Lad 123. Chap who likes BMWs, obviously. In your experience, we're not judging. In your experience, what are the best lenders / banks to approach for someone with a salary that is heavily bonus weighted, i.e. up to an extra 40-50% on top of base?
Careful with this, because we can't go naming lenders because it could constitute advice.
No, of course you can't. So
if I came out and said, "Oh, this,"
yeah,
and then do you know what I mean? So we've got.
Yeah.
What I would say is that there are lenders that will deal with bonuses in excess of base. I mean, think of people that sell cars, for example. You know, they might have a basic salary of 20,000, but they might have 50 grand in commission. Some lenders will always cap at that 100% of base. Some will go more. So I can't get drawn. It's not me being coy.
No, I agree.
I'm just mindful.
of
But
course
there are, you know, maybe Beamer Lad is a car salesman. I mean, who knows?
Right. Okay. Yes. Okay.
So one thing on that is that where you're using like kind of if there's a lot of bonus or if it's commission or you're going to have a decent track record.
Yeah.
So that's the one thing. If it's an annual bonus, you're probably going to need 2 years. If it's quarterly, certainly a minimum of a year. If it's every month, probably the most recent 6 months, to give you an idea in terms of documentation. So it depends how long you've been doing the job and how sustainable. What lenders are looking for is sustainable income. As long as it's sustainable, most are going to be okay with it.
Cool. Okay. I'm going to try and wrap this up within the next 10 minutes and get a few more questions through. Tom, whose question we took earlier, Tom 1991 Ash, will I lose or have to change? Would you lose or have to change your mortgage application if you fall pregnant before exchange or completion, or is it best to wait it out?
Do you want to go, Lewis?
Well, here's the thing. This is going to sound a little bit brutal, but if someone becomes pregnant in a relationship, and that's after you've submitted a mortgage application and after the mortgage offer's been issued, technically you should inform the lender. Yes, you should inform the lender. Now, here's the thing. A number of pregnancies don't always make it to full term. So I think it's the letter of the law. Yes, you should tell them. In all honesty, when I run affordability calculations, when it's young couples, I'll generally, even though there are no children in the mix at the moment, I'll generally put a couple of kids in just to make sure that how close to the limit are we here. So as long as you kind of run the affordability and it's, as long as you're not stretching it to the limit, it should be fine. Another thing to point out there is, depending on the lender, they might want to know about what the plan is for maternity, what the plan is for going back to work, and also, do you have savings to cover any period of time where there's only stat maternity pay or no maternity pay at all, and can you kind of look after yourselves in that?
Some lenders have certain policy on that, whereby it's written says, we need to know if someone is pregnant, count it as one dependent. A good broker, Lewis has already said he does it. I would do the same. If you came to me and you were pregnant, I would put one dependent in to check the affordability. It's sort of like the changing jobs thing post offer. We have had cases whereby somebody has moved from one job to another post offer. Now their situation hasn't got any worse. They've actually got better, and we've rung the lender because we have to disclose it. But the lender have said to us, well, if it's a material change for the positive, we don't need to know about it. So again, the duty to inform a lender is if there's a material change to your circumstances, and it's obviously can have an effect on your finances. So always be upfront. If it's that close on the limit on affordability and having a child's going to knock it out, it's tight anyway already. I would say you'd want to have that headroom.
Understood. Okay, here's a great one. This is from Mark Graham, who is someone who's relocating back to the UK soon. I happen to know. Hello, Mark. Do you ever deal with self-build mortgages, and how popular are they in the UK?
Yes, we do. Not wildly popular in our world, but again, going back to where we're based, there's not masses of building plots. See my NIMBY comment of earlier. So self-build mortgages are very specialist. All right, you tend to find that the lenders that distribute self-build mortgages will do so through packages. although you can deal direct. A packager is almost like a, I don't want to say a bro, it's like it's an extra layer that sits between us and the lender. Okay, so it allows us to filter the applications through, make sure that the applications coming across the desk to that underwriter are fully ready to go. There is one major player that has an intermediary wing and a direct arm in the UK that deals with self-build mortgages. They are specialists. There's lots of different ways you can do it. Some will lend against the land, some won't lend against the land. Often done in stage releases. So you have the 4 or 5 different stages whereby it's paid in arrears. So you do the first bit, they come out and look at it, they give you the cash, you do the next bit. So you have to have some money behind you to do it. They're one of those things that we get asked about occasionally from the first time buyer space, that and auction properties. And I would say in both instances, it's very difficult to be a first time buyer and build your own house. It's almost impossible as a first time buyer to buy a property at auction. It looks too good to be true, but the reason is you need to have the money behind you to be able to do it. So yes, we do. Are they popular? They're really popular amongst people who want to build their own houses. That's what I'd say.
Yeah.
So,
Cool, thanks for that. Next one, Night Hunter on YouTube. I've just had an offer accepted and I'm due to start my mortgage application. Do I go with a broker or do it myself? What would be the benefits besides having them do the application?
Christ, where do you start?
Okay, wow. So here's the thing. There's an amount of stuff that people do know about mortgages. So that's this bit, yeah? And then there'll be an amount of stuff that you know that you don't know. But then there's an entire world of stuff that you don't know that you don't know. And the point of a mortgage broker is not simply filling in an application form, because actually most of the time I don't even do that myself. I hide that off to because it's just data entry. That's not a valuable task. The point of a broker is one, to make sure that you get the right mortgage on the right terms at the right time, but two, it's to prevent you stepping on the landmines, because you won't see them, but we will. And that's the key here, because actually, once I've got all the documentation in, figuring out which is the best lender and the rate and all that kind of stuff, bar passing the actual credit scoring, that I've been doing this job for years. It takes me all of about 30 seconds, in all honesty. The skill and the knowledge is that I've spent a long time getting to that point where I can do it in 30 seconds. And it's about things that you can't even see coming down the line. So it might be a case of what happens if there's a down valuation? What happens if there's Japanese knotweed? What happens if there's a complication with a retention or an undertaking? What happens if there's, for example, a problem with the conveyancing and therefore it kind of throws something up? So it's about things like that, that in the main, a lot of the kind of hiccups can be prevented before they even start. But that's purely because there's lots of stuff that people don't know that they don't know.
It's 100% a service piece as well. I mean, we'll get asked. The other thing is making sure, if you're doing it direct and a lender phones you up and says, "Oh, we need this document," you go, "All right, I'll go and get that document." All right. Whereas we have conversations with underwriters where they ring us up and go, "I need this document," and we'll go, "Well, why do you need that?" "Because you've got this here, and that demonstrates what you need to know." And they'll go, "Oh yeah, actually that's fine. I can." Do you see what I mean? So it's knowing. Lenders will say, "We need a P60." Well, you've got a March payslip. "Oh yeah, I can use that figure." Yeah. And that goes that back and forth. Whereas you'd be running away and trying to get a P60 for 2 weeks or whatever it takes, upload it, sitting in queues. So I always describe, Lewis is 100% right. You don't know what you don't know. And you don't have to use a broker. There's no law. Go and do it. If that's what you like to do, crack on. It's not a prerequisite. But yeah, it is. There's a lot of stuff that goes on behind the scenes. And what you'll find is when us as brokers are sort of having initial conversation with clients, although we're sort of asking you about what do you earn, what we're actually doing is we're trying to tease out the answer to the stuff we know is going to be a problem. Okay, all the stuff about when you tell us what you earn, we don't generally kind of go right, and we remember that. What we do is we're writing a number down and we're going, well, what's that as a loan to income? What's the LTI on that deal there? Right? How are we going to work? Is that a problem? Yeah. When you say credit scores 886, well, in our head we don't go, oh, is that good? We just think, well, that's probably okay because I know that's there's nothing bad on the credit. But if you tell us it's 600, we're then thinking, is that CCJ a default? So it's all about the information that we glean from just having conversations. And that's the key thing. A good broker, it won't seem like a ball ache. It will just be a conversation with someone who ideally, in an ideal world, is obviously listening to what you're saying. Okay. And then, as Lewis says, in their head, filtering through, is that a problem? Is that a problem? Is that a problem? I always say to my clients, we're trying to find the bumps in the road before they appear. Okay. Because if we have that up front, we can place it with the right lender and you'll have an absolutely banging time, which is what we all want.
Well, I always say, if there wasn't any value in what independent mortgage brokers do, they wouldn't exist. It's as simple as that. It's you know, a lot of people, that mentality, that false economy mentality, which is, why would I pay for someone else to do that when I can do it myself and save the money? That is this false economy mentality. It's like it's that what's the phrase I'm looking for? I don't know, but it's penny wise, pound foolish, I think, is probably the way I talk about it.
So, I've got a great analogy that I used actually the other day. That someone rang me up to say, I'm looking for mortgage advice, and then went, why should I use a broker?
Right, okay.
Like, you rang me. I'm not pitching at you. But so the analogy I always use is this. Right. So I'm terrible at DIY. I'm shocking. I wouldn't want to. If you wouldn't want me to tell you a house or do anything really. And now here's something. So I could probably watch a YouTube video and then change my brake discs and pads, but I would never ever think about doing that because I value my safety. Yeah. So I could watch a YouTube video and do it, but I wouldn't because there's a someone called a mechanic that's qualified to do it, and I'm just going to put my trust in them because they do it day in day out, and they're going to know and they're going to see things that I can't see because they do it all the time. And it's the same with the mortgage broker.
It's not just that. You know, as an impartial observer of this discussion and this debate topic, which I think a great place to end on, is the fact that every single lender views every single applicant slightly differently because they've all got different criteria. You know, the number of different combinations there are in the thousands, multiples of thousands. And that's where you guys, anyone who's an independent whole of market broker, whether it's you guys or any other people who are independent whole of market brokers, are going to give anyone buying a home a better chance of getting a better mortgage deal because you know all of those thousands of products, all those thousands of lenders, and you know which lenders like what kind of risks and what kind of borrowers and that kind of stuff. So you're a matchmaker in a constantly shifting environment, where only once you've been through someone's detailed personal situation are you actually going to know, well, okay, now that I know all of that situation, and everyone's like, no two people are the same, are they? Right? Every single person's got a different scenario. And just knowing where to start for that person right there is the value, because without that knowledge, you know, if you don't go and use an independent broker, you're just throwing shots in the dark. And you might get a deal you're happy with, but will it, you know, but for people who are struggling to afford a property, your chances of buying the home you want are that much greater by having a professional on your side that actually knows the marketplace. And I think it's a really unwise, foolish, false economy to not do that. I mean, unless you are all boxes ticked, high street lender.
Yeah, but Charlie, this is the interesting. Sorry to interrupt you there, but this is the point, right? I mean, robo advice was 2012. Everyone started talking about robo advice, algorithms that could do it. It's never worked. And the reason it's never worked because it's at the moment. Who's never say never, right? I mean, the robots are coming. They've been saying this for 12 years. But the point is that it is too nuanced, all right? And there is a human factor that you underestimate. Having someone you can pick up the phone and go, shit, I'm scared. What the hell's going on, right? Or what do I do now? The estate agent said this to me. And someone there that's done it 4 times that week that goes, oh, don't worry about that. We can sort that out for you. That is as much our job. I say to my clients, I say we are 50% financial advice with 50% customer service. Like, you don't have to use us. It's not, as Lewis says, we don't have to go out and pitch to everyone. There's enough people out there that want to use our services, thank God, for the good ones. But it's... I sometimes say to people, go and have a go. If you think you can do it, go and have a go. That's great. There's lots of things you can do, but they're not recommended. I could represent myself in court. Hopefully I never have to, but I wouldn't do it. You know, I'd pay a professional that knows what they're doing to help me out in that instance.
Right, guys. Unless there's anything else either of you would like to add, I would just like to thank you both very much for your time and your great answers this evening. We've had some fantastic questions, lots and lots of questions we didn't get to, so sorry about that. We will do these more regularly if the boys are up for it and happy to do it more regularly. Because you know, I'd love to get everyone's questions answered, because I choose the questions that I think are going to be where the answers are going to be useful to the most number of people. But there are some questions I would love to have happened. There are people asking all kinds of opinions about market and prices and the fact that you guys disagree with me and what's happening in house prices. I will answer all of that stuff in another video. Nationwide said house prices going up today. Halifax said they've been out for the last 3 months, etc. It's all to do with timings. It's why I think it's still going down, and they're going to go down faster in the second half of this year. But no more time for that today. So Lewis Shaw, thank you very much. Graham Taylor from Hudson Rose, thank you very much. You guys have been fantastic. I've had nothing but great feedback so far from all the people that have been using it that have come through Moving Home with Charlie. So thanks very much for taking care of them. I hope that anyone watching this evening who's thinking about talking to a broker, by the way, I'm right, aren't I? The first conversation with you is a no obligation conversation, right? Yeah. So, everyone needs to understand that, right? You can get in touch with these guys and have a full conversation with them and find out whether you want to work with them or not.
We encourage it. We encourage that.
Yeah,
you've got to work with people you want to work with. If we're not right for you, we're not right for you. But,
yeah,
exactly. So, and I mean, I do spin that back in the sense of you've got to feel comfortable with us. We've got to feel comfortable with you. It does work two ways, because I'm relatively, as Graham to say to before, we're both relatively busy guys, and I'm certainly, and I know Graham is, we're at a position now in our kind of careers and our businesses where you can tell the people that want advice and they want help and the rest of it. You can tell the people that think they can do it themselves, and you end up. I mean, I recently sacked a client in so much as I was like, do you know what?
Yeah,
you keep second guessing me. Just get on and do it yourself, mate, because I can't be asked dealing with you anymore.
Yeah,
but.
Oh, that's wonderful. I'm going to wrap it up with this comment from Norlis. A quote: "A man who represents himself in court has a fool for a client."
That's great.
That's great. Well, on that happy note, guys, I'm going to say thank you very much indeed. If you would like to get in touch with these and set up a call with them, go to mhwc.co.uk/mortgage at the bottom of the screen there. It's also in the link in the description below on YouTube. And best of luck with everybody. Lewis, Graham, thanks very much again. I'm going to wrap it up right here and now, and see you on the next one. Thanks, guys.
Cheers. Thanks, mate.